Okay, quick video on earnings per share on video as requested by some. I don't know why, it sounds painful. But anyway, the earnings per share ratio, quite often misunderstood. So let's just make sure we understand what it calculates. So it's the profit after tax. It has to be the profit after tax because we cannot pay any dividends until we've paid all the finance costs and all the tax that the company is due, divided by the number of shares. So this tells us how much profit we make for every share in existence. So let's just state this again, the profit. So therefore it does not indicate how much is being paid in dividends. A lot of students mistakenly use the EPS or earnings per share to calculate dividends as an essay, which will massively impact your marks because it demonstrates a lack of understanding of the ratio. However, whilst it doesn't tell you how much is being paid in dividends, it does tell you the potential. Because obviously, if a business is generating large amounts of earnings per share, they do have the capacity to pay large amounts of dividends. So we would compare the EPS to other measures such as dividend yield and understand why they may be different. So a high amount of earnings per share could mean that they're going to invest more rather than pay dividends, and that could establish the link between the two. So it's something you could question in your analysis and evaluation. It also measures profitability relative to shares issued, as we've said. So therefore, a high earnings per share could encourage investment. So more people would want to buy shares in this particular company because they can see the potential for a return in the future. If this is the case, it could, I mean, we've always got to stress could, drive up the share price and help you to get a capital gain on this particular stock. And so that is a benefit of a high EPS. And I think it's important that within an essay you talk about the EPS, but you don't make it the most important factor for the investment decision because it could limit your judgment because it is only an indicator of profitability. And obviously, as a shareholder, you're looking more at how much we've been paid in dividends. And there are other ratios such as the dividend yield, dividend cover, which could give you a better understanding of that. However, it is a measure, it does establish profitability, so combined with other factors could help to create a judgment. One other point that's referenced on the slide, the impact of share issues. So obviously, if a business has had a recent share issue, there's more in existence. That is the bottom half of the formula, so that would drive down the earnings per share. But the hope would be that the investment generated from the share capital would eventually increase profit. So a declining EPS doesn't necessarily indicate a problem. It could indicate an investment and a longer term improvement in EPS. That highlights a limitation that could be questioned as part of your judgment. Okay, other investment ratios to go, but thank you for listening.